you're familiar with Construct Connect's data, right, we look at a lot of starts information in the non-residential space. The really interesting thing about that is that when we look at that data across Canada, 2022 really will be the worst part of that for the non-residential part. When we look at the strengths to come, right, we see residential will be slower to recover, so it'll continue to struggle in 2023. But in 2023, we'll see a rebounding, 35% up in terms of starts again, and then 22% in 2024. The non-res, 30% and 14% respectively, and then the residential struggles, right? So down 4%. So it'll be an additional sort of slump. From where we already are, which is already at a depressed level. But then 19% up in 2024. I think a lot of us learned this from 2008 as well. Those firms which were more diversified tended to rebound much faster because you don't know where the pockets of opportunity are always going to lie. I think, if you're a firm here that can work in multiple verticals, you're going to do much better coming out of this slump. I need to think smarter, not just work harder to come out of this.
Are you as optimistic as Michael about the near term looking forward?
I think looking forward for sure. There is definitely a bit of market hesitancy, particularly in the private sector. Combination with interest rate hikes and uncertainty in construction costs certainly makes it challenging for clients to commit to new work, new projects. Construction's just the industry in itself is a lagging indicator in where the economy is. So we've rode through COVID fairly well, and I think 2023 and the end of 2022 we've seen some softening.
Would you say the whole sector has done reasonably well through the pandemic?
Considering the gravity of the pandemic, I would say the construction sector has done well. There's definitely market sectors within overall construction that have been impacted substantially, where others are doing quite well. So infrastructure spending is a good example, whether it's healthcare spending, transit, transportation. There's a large commitment from the government to keep that spending going. Where we see some of the softening is in the market uncertainty. So office space. We're looking at office vacancy rates over 10%, which is unusual when normal is between 5 and 7%. So there's definitely market sectors that provide the balance between some that are buoyant and others that are struggling.
There's a lot of challenges in our market right now. Escalation is remarkable. I closed something like 2 bid packages 2 months ago that were in excess of $80 million, and one was 19% over budget. We had rechecked the numbers back in June, and the other one was 13% over budget. The challenge is that, one, we just came out of collective bargaining agreement session, which was unprecedented in terms of the increases.
3% a year, roughly, on average. Yeah.
And then, of course, we still have the globalization supply chain, which is the latest now. Things have gotten better as far as container prices, et cetera, but Port of Vancouver is the bottleneck at the moment. There is a competition out there throughout the world for computer chips and all the high technology, and be it on pumps or air handling equipment, whatever, it's going to the highest bidder, and that's creating this demand inflation, which we're still contending with today. So lots of challenges.
In Canada, I know the Bank of Canada is a little nervous because they're afraid Canadians have amassed so much debt that it might cause more damage than good. Where do you see inflation and interest rates going?
Canada has a lot of export strengths. And if you get your monetary policy to achieve one thing, which might be to reduce interest rates to help essentially deflate some of the demand, one of the challenges you can have is that you can over-strengthen your own currency. We've seen that with the US dollar. It's up 20% against essentially the broad basket of foreign currencies out there. Canada has been able to, I think, manage that a little bit better. In other words, what happens is that your exports don't become excessively expensive. You can import deflation essentially through doing that, but to the degree that you need to maintain an export market, that can be really important. We're coming near that crescendo. 2023 will certainly, I think, see that if inflation continues to moderate. Generally speaking, again, I think we've hit that peak. On the construction side specifically, from what we track, we've seen those year-over-year increases begin to soften. And part of that... And
if you're right about inflation moderating, then can we expect interest rate escalation to slow down?
That's right. That's what I'm getting at, is the interest rates will slow down because of the things we were talking about. The question becomes one of, how quickly can they undo some of that? If they overdo it, right, if they go too high and then they hold on to these higher rates for too long, it creates other headaches. And as you mentioned, those who are leveraged, especially if the debt is like commercial paper or something that is of a variable rate that you can't lock in.
Those of us in the room that have mortgages are going like this.
Yeah, right. Everybody was slow to figure out what was happening, which was a little surprising to me. You can't borrow, trillions of dollars and then give it directly to people and then also shut off supply chains and expect everything to be okay. So I think, one of the things I've written about is that a lot of the crisis we're seeing today was man-made, is regulatory and generated, right? They shut down supply chains, they shut down businesses, and then they give you all this money and say, be happy. And we've never done anything globally on a scale like this before. So we were, the officials were doing things off the cuff, and now we have to deal with some of those repercussions. The world banks have become much more attuned to what they need to be watching out for. So I'm hopeful that on the backside of this, they will realize that they're going to need to reduce those rates.
What are you finding are your challenges at PCL related to sourcing bodies?
Definitely a different marketplace than we've seen in the past. Currently, we go across Canada and we've got hot markets across the board. So it's definitely been very challenging. We're looking at how we do things and how we approach labor availability, and we've put together projects taking that into account, where in the past we would just go off of past history. We know how long it's going to take, a certain size crew to do the work, but now we can't depend on those sizes of crew to show up every day. We may get 50 to 70% of the crews coming to work for various reasons. So it's become a reality that we've had to address on all of our projects. And again, going to sort of a bit of a theme, the uncertainty around labor availability really plays a big factor, especially when you're looking at some of the mega jobs that, an impact of 25% in your labor availability creates a schedule impact. It's enormous.
What does that conversation look like post-tender, pre-award? What are you drilling down for now that you didn't, 3 or 4 years ago?
Well, when we talk about award, I think one of the important issues that we face is what is the award period.
And do you want it?
Well, exactly. Yeah. Well, gone are the days of 120-day award period. That's something that as a GC we can't agree to anymore. We've been seeing quotes that were good for 5 days, good for 15 days.
Yeah, 10 days.
And how to deal with that is very challenging. We often have to add a contingency, even if we're able to accept that. The questions that we do before we close and sometimes after we close are about supply chain. What is longest delivery? And in the, I'm going to say, previous or pre-pandemic, those weren't questions that we typically would ask. Now they're being asked on every trade scope. And we're getting into trade contractors' kitchen as far as what their supply chain is and what their long lead items are, because they're so impactful on the overall project.
Now, Jeff, when Monique says she's getting into the trade contractor's kitchen to try to drill down and make sure there's a comfort level, as an owner's rep,
We're right
you're
there.
in the kitchen as well.
We're right there.
You used to take their word for it.
We ask leading questions. We already know the answer, but
think
we
you do.
want to confirm. So we pre-qualify our trades. We look at, before we invite them, or before our CMs invite them to bid, we ensure that they have the capacity, that they have good financial standing, et cetera. But then once the bid comes in, then we're going right through to supply chain issues, schedule, how does that coordinate with their other commitments? Quite honestly, I feel for the trades, because they are almost playing like a whack-a-mole kind of game, where they're sending more people one week to kind of keep up with one schedule, and then taking some of them away and sending them to another job. There's a lot more scrutiny and frank, transparent conversation that's required at the sub-trade level before an award is done, because there's so much risk, more additional risk that we have to manage that we didn't really have to concern ourselves back in the 2017-18.
Are prices really going to come down? Or are we so nervous in the world after all this disruption that we don't drop our prices?
Well, that's a great question. When you look at the most raw commodities, like the coppers, right? I mean, copper is a fantastic leading, I think we could say it's a pretty good leading indicator of where general prices are going, right? Because so many things are made out of certain base products. We are seeing steep declines in copper. If you go back and you look at copper prices over the last 15, 20 years, when it does have a significant correction, the rest of that commodities group, the construction, products, that basket, it follows suit. It doesn't follow suit as quickly, and that's why copper is considered a leading indicator. But that's one of those things we're always watching. The other thing that we constantly watch are inventory to sales ratios, because what happens, right, is you have to remember that your inventory is simply cash in another form. And the important part to that is that you need to be very careful with your inventory management right now. I know we're still at a deficit in a lot of situations where we're still looking for certain types of supplies, but we don't want to hoard that. That's something that when we did a survey last year about what are your inventory solutions, I think 1 out of 5 contractors that we surveyed said they're basically buying any inventory that they can find, even if they don't have a plan for it, right? That's a very dangerous strategy to take right now when you see the copper prices, the signals starting to say, hey, look, things are about to normalize, or they're on their way towards normalizing. You don't want to be caught with a supply of inventory that may be outdated or beginning to be antiquated, right? And then all of a sudden, on top of it being aging, it's also losing value against current, what's currently available in the system. So if you bought copper at 2 times X, and you can buy brand new copper at X, you're in big trouble, because you're going to try to sell that inventory. Well, you're going to have to sell it at the going rate. So your cash bound up in this old inventory that's losing value, it's depreciating for a whole host of reasons, possibly, whether it be through normal supply and demand if markets cool, but also just because of commodity price changes. So having too much inventory is one of those things that I'm looking at right now as a real concern for those, especially for the smaller GCs and trades. They have fewer opportunities to make, say, cash flow missteps, right? A larger firm has ways to maybe sidestep or resolve those kinds of missteps.
The lending community is still saying they want to see 65 to 75% stiff sum bid at the trade level. So while there may be all these collaborative agreements at the next level up, they're still looking for cost certainty. Many of my clients are doing a let's wait and see, anticipation that perhaps the purchasers of condo units will become comfortable with the new normalized interest rates certainly then there's also the comfort level of the lenders who enable these purchases. Right now, the market is stalled on the revenue side of the equation.
Used to be simple, but you go to the bank, you want a mortgage, they talk loan-to-value ratio, they talk debt service coverage, and then you're done.
Well,
now you go in, and that's just the beginning of the conversation. They got the stress test
to add, to layer on top of that. So those first-time entry buyers, they've got challenges of being able to acquire the necessary down payment, but also pass the stress test. And that makes it very difficult when interest rates having substantially increased.
When we are talking about supply chain, we're assuming that the products are actually in hand in some plant somewhere around the globe. A lot of our challenge is that they haven't even been made yet.
Yeah.
There's products that we're waiting on that are their pictures.
And they're on a production line list in a factory in China where people are either locked out or locked in because of the zero COVID policy in China. So production in China is hampered. And that is where a lot of product comes from. I will admit that we've seen rebar prices have gone down 33% in the last 4 months. But that, quite honestly, knowing somebody who actually owns and runs a mill, the market that we've been paying for a while has been a little bit overinflated to be able to make up for some of the challenges that the suppliers have had beforehand. So in some parts of our construction costs, there have been some adjustments. Some of them have been emotional for fear of what the future may come, but overall, prices are still going up.
Where do you see technology in the next little while? We know that a crisis is a trend accelerator.
We think about all the products that go into construction, even if it's a sink faucet, right? I've installed plenty of them in my life. Some are really complicated and take a lot of little bits and pieces, and so they take more labor. Other ones are pretty much you plug and play. I think that for those firms that are really going to succeed moving forward, they need to think about how do you make your product user-friendly. In fact, and not just not end user-friendly, but installation-friendly too, right? You got to find ways to build smart products that take less time to be installed. It can be plug and play, call whatever you want to, but I think we really need to have more discussions around that. How can I put 200 apartment buildings together, in a shorter amount of time using smart design?
As I recall, when PCL created Agile, one of the first big projects was I think it was 350 patient washrooms that you were going to build off-site.
Washroom pods,
And then they
yes.
were plug and play.
Correct.
That's not as simple as it sounds. Just
Definitely
go
not.
manufacture off-site and bring it in. When a contractor is not PCL and doesn't have PCL's resources and is contemplating sub-assembly off-site or modular, it isn't as simple as it sounds.
It's not. True success on a project like that really starts with the design and the planning perspective. It doesn't start with the contractor saying, I want to do modular. It happens well in advance. There's ways that it can be done, but it has to have contractor involvement because our designers aren't necessarily trained to think that way. And in North America, we haven't adopted as readily the modular sector, modular construction as they have, for instance, in Europe. So it's a mindset change, not only from the construction industry, but from the architectural engineering industry as well.
Are you seeing much innovation in the industry that you didn't see 10 years ago?
Our industry and the sub-trades, they are very smart people, and they continue to come up with innovative ways to be able to complete their task of work quicker. Advancement in technology doesn't necessarily mean computer chips or drones or anything like that, but it
Just
begins
thinking outside the box a little bit?
Yeah, and it really does begin at the owner level, who wants to get the project done quicker. If a design can be arrived at that enables a trade contractor to be able to assemble in a shop in a controlled environment at a lesser cost, then it gets reflected in their pricing to the project.
I think there's been more change in the industry in the last 3 or 4 years than there had been in the 100 years before that. But do you agree at a macro level that our industry is really evolving?
Can I just, the challenge that he's going to have in answering that is because, once again, because of the workforce and the lack. We have farm workers who they have men and women working for them that aren't necessarily the very best, and therefore it drives down their productivity.
And so to your point, right, how do we solve that problem? I think that's really the question I'd rather answer is how do we solve this problem of decreasing productivity? We're seeing it in Canada, we see it in the United States. In short, what's happening is that those people who are willing to work, which is at an all-time low in both countries, the Canada's labor force participation rate is like 64.8. And when you look at that labor force problem, the baby boomers, as you pointed out before, a lot of them essentially said, this COVID thing is turning my world upside down. I'm out. I have the ability to retire. In terms of its percent still in the labor force, there was a shift downwards, and that shift downwards never recovered. We only have so many resources, right? And we need to figure out how do we make the most of them. It goes back to what I was saying before about every employee needs to be brought up to their full potential. And that's the responsibility as much of the company owner now as it is of the individual, right? Now you can push on a string, and if the individual doesn't want to learn and doesn't want to grow, there's not a lot you can do there. But for the ones that you can encourage to reach their full potential, everything you can do to help them along can be so important, right? And I've seen lots of companies out there, and I would encourage all of you to share ideas with John, work with any